Everybody, it's your boy Creative. Go ahead, say it with me. We are back at it again to create something great. Now, today I'm real excited for what we got planned today. I hope you do stick around for the full video. Use them to ID patterns. And I like to use Claude Code when it comes to being able to flesh out the idea. And then once we have the basis of the idea, then we're going to jump right into creating the strategy. So again, I'm really excited for you all to be able to not only go through this process with me, but to actually see this, right? This is behind the curtains, right, of what most algo traders, oh, here we go. It's not to say that sometimes you won't get connection issues. So we're just getting, this is the first time I've ever seen this. So what I'm going to do, just going to copy that. I'm going to refresh the page. What's on my mind? This is on my mind. All right, perfect. Now imagine you're in a battle between buyers and sellers, right? In the stock market. The candlesticks is how we see who's winning each round. What is a candlestick? A candlestick shows what happened to the stock price during a certain time frame. And the time frame that I like to use here is the 1 minute time frame. So that's what this SPY chart is, right? It's a 1 minute time frame. How you can tell, you go to this little 1M. So that 1M lets us know 1 minute. We can go to 2 minutes, 3 minutes, up to 10, 15, right? But for the strategies that we're going to be creating here, it's going to be using the 1 minute time frame, and it's for SPY. So what it's letting us know is that each one of these candles, right, represents 1 minute. So let's go ahead and go back to our chart. So 4 things you need to know is that each candle has an open, a close, a high, and then a low price, right? So 1 candle equals 1 round of fighting between the buyers and the sellers. So everybody, it was scrapping. It was getting at it. It was getting active. All right, so the candle has a body. That's the fat part, right? This shows the open and the close. And the wicks or the shadows, the thin lines, show the highs and the lows. So if the candle is green or white, the buyers won, the price went up. If the candle is red or black, the sellers won and the price went down. So the story each candle tells is that a long green candle equals the buyers were strong. A long red candle equals the sellers crushed it, right? And a tiny candle with the long wicks equals indecision. Both sides fought hard, but no one really won. So traders don't just look at one, right? They're looking at patterns of candles together to guess what may happen next. These are some examples of the patterns, and I don't want to go to them as much because I have my own pattern that we're going to be bringing to you all. And again, this is a pattern that I really think is going to 10x some of you all's trading. Oh, you know, one thing that I've been saying that I need to create and I haven't created yet. And let me just go ahead and, this is not financial advice. If you do seek financial advice, oh, look at that. Cursor just introduced something new. Try, you see this on the bottom left? Try Composer 1, 4 times faster than similarly intelligence models. Composer 1 completes most turns in 30 seconds, built for fast inflow agentic coding. Free to use for a limited time, Composer 1 is Cursor's new agentic coding model at no cost. So maybe we'll use that today. So that's interesting. I'll go ahead and give Composer 1 a try. All right, so let's go back to our charts here. So why option traders care? So option traders try to predict short-term moves. Will the price go up? Will the price go down? Candlesticks help them spot this, right? We can spot a reversal when the price might change direction. We can spot a continuation when the price might keep going. So if we see these bullish patterns, they might buy call options, right? Betting that the price might go up. But if they see bearish patterns, they might buy put options, betting that the price might go down. So let's go over options real quick, because I know everybody wants to trade options. Everybody wants to be able to get into option trading, but nobody really understands. I didn't understand it at first, right? And I wanted to be able to break this down in a way that it makes it super, super simple for you all. So what we're going to do is an option contract, right? So what is an option contract? An option contract is a contract. An option contract is like a ticket that gives you the right, but not the obligation to buy or sell a stock at a specific price, right? The strike price, right? Before a certain date, and that date is the expiration date, right? So let me just change this color. So that specific price is the strike price, and before a certain date, that is our expiration date. So let me just make that purple. All right, perfect. Let's keep going. So we don't actually own the stock yet, right? What happens is that we have the choice if we want to buy or sell it later, depending on what the market does. So an even more simple analogy is, imagine you have a concert ticket for $100, and even if the resale price jumps to $300, you still get to use your $100 ticket, right? So we have two options. We could either go to the concert, right? Or we can sell it to somebody else for a profit. What would you do? I think, I'm not going to hold you, maybe I'll profit. I can catch it on YouTube later. So let me go ahead and profit my quick little $200. All right, babe, let's go ahead and have a little night in, right? And we can catch that concert. All right, beautiful. Let's keep going. And I ain't gonna hold. Okay, never. I'm not gonna go off to a tangent. So that's the option contract, right? So the ticket is the option price. The concert date is the option's expiration date. The ticket price is the option premium, and the concert seat, the stock, is the asset you buy or sell. So an option isn't ownership; it's control, right? Let's highlight that. Option isn't ownership; it's control. You're paying for the right to choose what to do later based on how the market moves, right? And we all have to remember that 1 share of option equals 100 shares, right? So for every 1 share of option, we have 100 shares. You can barely see that. And I'm still getting used to which colors are good. I think green is good. Can you see green? You can see green. All right, so let's go over the two type of options that we're mainly going to be buying here, right? We have a call option. So a call option is the right to buy a stock. It's the right to buy a stock at a set price. What is that set price? The strike price, right? Because we think that the market might go up, right? So if we buy a call option, what happens? Let me just zoom in a little bit more just to make sure there's no issues. So if we buy a call option, we think that we're bullish on the market, right? So what does being bullish mean? So what does a bull have? I'll wait. Bull has horns, right? And what do those horns do? I'll wait. Horns point up. So if we're bullish on the market and a bull has horns and those horns point up, we think that the price of the market might go up, right? And normally, right, when stock prices rises, call options go up, right? And next we have a put option. A put option is the right, and I know I've done this like 1,000 times, but whatever. Can you see that? Yes, you can. So a put option is the right to sell a stock at a set price. What is our set price? That's the strike price, because we think that the market might go down, right? So put option equals that we're bearish. Bears normally have their pause where? Down, right? So when we bear down, right, we think that the market might go down, all right? So when stock prices go down, put options normally go up, right? So do we understand that? Perfect. Let's keep going. So volatility. Next, I want to talk about volatility and implied volatility, because these two are definitely going to come into play when it comes to options and being able to create an option strategy. Because the main thing here, right, and again, I'm still very much so a novice in this, so I really do appreciate y'all for sticking around and being able to understand what my process is, right? But what algo trading is, right, is being able to have a set of rules and instructions that we're going to code within using Python, right, in order to make sure that once we run our bot live, it can follow these rules and instructions. But before we can even get to that rules and instructions part, we have to make sure that we understand what's going on in the underlying market, right? So that's why I wanted to go over what is a call option. I wanted to go over what is a put option. I wanted to go over how does an option work, right? So now let's talk about volatility. Volatility lets us know what's going on in the market when? Right now, right? So volatility is real time. It's not in the future. And there's a reason I said that, right? Implied volatility is what the market expects to be going on in the future, right? Usually the next 30 days. So volatility is a real time look. What's going on right now, right? What's going on in the market? How can we gauge it? And volatility, the way that I normally look at volatility is either through VIX or VXN. Let me just pull up VIX real quick. I think I'm going to make the strategy using SPY, the S&P 500, the top 500 companies within the New York Stock Exchange. I don't know yet. We'll see. If you all have a comment and which one I should use, and if you have a preference, maybe I'll use it. I don't know. We'll see. We'll see. So VIX, right? VIX lets us know volatility, and it lets us know what's going on in the underlying market right now. Right? So if we have a VIX of 19, that's letting me know that the market is a little bit elevated. So there's ranges of VIX. Okay, hold on. Can you briefly? discuss VIX, the ranges of VIX, and how it is used to determine the volatility of the market. So think of VIX like the volatility index. It is a fear meter of the stock market, really the S&P 500, right? VIX follows the S&P 500. So let's keep going. It measures how nervous or how calm investors are about the next 30 days of the market movement. That's IV, but let's keep going. When VIX is low, people are relaxed and they think the prices will stay steady. When VIX is high, people are scared and uncertain. They think a big move will happen, right? Volatility. And that move could be either a bearish move, right? What is a bearish move? A bearish move, bear down. So we think the market is going to go down. Or it could be a bullish move. What do bulls have? Bulls have horns, right? We think the market is going to go up. So it can be either bearish or bullish. So 10 to 15 is VIX is calm, cool, calm, and collected, right? Low volatility, price moves normally, steady market. 16 to 25, right? Normal, average volatility, typical ups and downs. Between 26 and 35, people are starting to get nervous. Higher volatility, we have faster price changes, right? We have a lot of uncertainty in the air. And anything above 36, fear, right? Very volatile, large, unpredictable moves, panics, or crisis. How traders use it, right? Low VIX, market is calm, option prices are cheaper, less risk priced in. Traders might expect small moves and trade accordingly. High VIX, market is jumpy, option prices are expensive, more risk is priced in, right? Traders might expect big moves and use the strategies to benefit from them, like volatility plays. Since options are about predicting movement, VIX tells traders how much movement the market expects. If VIX is up, options, calls, and puts usually become more expensive. If VIX is down, options, calls, and puts usually becomes more expensive when it's up, more cheaper when it's down. That's why many traders check VIX before entering a trade. It helps them gauge their risk and timing, right? So VIX at 20 right now, and it's oscillating between 20 and 1996. Shout out to all my 90s babies. But so VIX right now is it's at 1996, right? So what it's telling me, for me in my house, that's telling me it's a little bit elevated. I know it didn't have elevated here. Damn, it just shot right back up. All right. So VIX ain't playing. VIX is saying, hey, I'm expecting a big swing, and this big swing is either going to be positive or negative. And VIX and SPY has an inverse relationship. What do I mean by that? When VIX is up, SPY is down. You see, we just saw this. Okay, this is a great example, and I'm glad this just happened. You see this long wick here? Pause. But you see this wick here, right? What happened is that VIX just tested a new level of 2003. That 2003 was just rejected. Because it was rejected, the full engulfing body, right? We don't see this nice green big body here. We don't see that body here, right? Because what happened is that the VIX level at 2003 was rejected. So that's why we see that long wick here. Pause. That's why we see that wick here, right? Because it's telling us that at 2003 it was rejected. Now it's currently at 1999, and it's trying to see the sellers are trying to come back in and push it back down, but the buyers are staying strong, right? So here, and again, I told you it's an inverse relationship, but that doesn't work all the time. It's about 75-80% of the chance, right? There are moments where a popping VIX can have a popping SPY. I think that's what we're seeing right now. See, VIX just took a dump, and what happened to SPY? Ain't that crazy? Again, it tested new highs, was rejected. It tested a new high, was rejected. It's right now, it's testing a new high. So let's see if it may be rejected. If you see those long wicks coming, right, it's testing a new high, and the sellers are coming right back down to slam it down. Right here, we have a doji. The doji is indecision, right? Neither a buyer or seller won, but it closed red, right? So it's telling you maybe the sellers won, right? But this was indecision. We have more indecision, a little flatter doji here, right? I just gapped up. So that's interesting. So SPY is popping right now. Remember, SPY is the S&P 500. It's the top 500 company within the New York Stock Exchange. Let me show you a few of their holdings of SPY, right? So some of the holdings is NVIDIA. We have Apple. We have Microsoft. We have Amazon, Broadcom. This is Google. Don't ask me why they call themselves Alphabet Class A, but this is Google. This is Facebook. Don't ask me why Alphabet Class C. This is YouTube. This is Tesla and Berkshire Hathaway, right? So this is just some of the top 10 holdings within SPY. And SPY is an ETF or an exchange traded fund. Whenever you think of an ETF, think of a quilt, right? And each patch within the quilt is a different company. So this particular quilt has 500 different companies, right? So if I were not to trade in the SPY and said, hey, I like NVIDIA, I would have to go buy NVIDIA. I would have to go buy Apple. Or I could just go trade SPY, because SPY allows me to be invested in all these companies plus 490 others, right? So that's why I like SPY. All right, perfect. Now, can you explain the bullish and bearish flag, pennant, candlestick pattern like I'm 12 so we can really understand it? Why am I using? Because that's our strategy, right? Bullish and bearish flag pattern. So now let's understand it. First, what are flags and pennants? Think of a market. Think of the market like a race, right? Prices zoom forward. It takes a short break to catch its breath. Then it zooms again in the same direction. That pause forms a flag or a pennant shape on the chart. It's a continuation pattern, meaning it's usually continuing in the same direction it came from. A bullish flag or pennant, when the price is going up, the stock shoots up fast. Big green candles. This is called a flagpole, right? Then it usually slows down. It moves slightly sideways or downwards. This is the flag or the pennant. Finally, it breaks out and keep going up again. This is the next rocket boost. What it looks like. So imagine a straight flagpole and the price is rising fast. Then a small rectangle leaning down, right? So the flagpole, small rectangle leaning down, right? So once the price breaks out again at the top of the flag, it often shoots up. The bullish pennant, the bullish, can I talk? The bullish pennant. Same idea, but instead of a rectangle, the pause forms a tiny triangle. Price squeezes tighter. All right, the flagpole. Here's your little triangle. If you tell me what degrees this is, remember back in geometry. What is that geometry? Yeah. What degree? Angles, degrees. When it breaks out, that triangle top, it signals for more upward momentum. What this means, buyers are still strong. They took a short nap before pushing higher again. Traders often enter a call option or buy shares once this breakout happens. A bearish flag or pennant when the price is going down. The price falls quickly, a big red candle, flag pull down. Then it drifts sideways or slightly upward, forming a flag pennant. Then it breaks down again, continuing to drop. The bearish flag is like a pole going down, then a small rectangle leaning up against it, right? Sharp fall. Then the same thing, but the rest area looks like a little triangle, right? The little rest area right here. Once it breaks down that triangle, the fall usually continues. What it means, sellers are in control. This sideways pause is just a cool down before another drop. Traders often enter a put option or short stock. We're not shorting or buying stock right here. This is just options. I mean, we can get into that, but this isn't the big short, bro. I'm not getting into that right now because you better know what the hell you're doing. And when the market breaks down, happen. So bullish flag up, bullish pennant, call, and then bearish flag, bearish pennant. Okay. So we understand that part, right? Give me a thumbs up. Let me know that we understand that part, and I'll keep going. All right, beautiful. Let's let this thing run. All right, perfect. Now we want to discuss creating a 0 DTE. 0 DTE means that these are options that expire the same day. The reason I want to use 0 DTE is because this enables us to be able to trade options starting at $100, right? The reason I want to start at $100 is because I want to be able to dispel the notion that you need thousands of dollars to be able to trade options. The way that we're going to be doing it, you do not, right? So let's follow me, but don't follow me, but follow me if you know Vine, but follow me. All right, 0 DTE using SPY. Let's discuss being able to use the bullish or bearish flag / pennant in order to enter a call or put once the signal forms. Let's discuss how we can get this done. All right, excellent. Now we're stepping up into a real trading zone. We're taking the bullish and bearish flag or pennant concept and turning it into an actual option trading strategy on SPY, the S&P 500 ETF. Core idea, we want to detect when the flag or the pattern forms a bullish or bearish, right? Confirm it is real, not just noise. The way that we're going to confirm it is real is by volume, and you're going to see it's here. Enter a call if it's bullish and a put if it's bearish once it breaks out. In short, we're going to wait for the pattern, confirm the breakout, then enter the breakout direction. Step 2, what it looks like on the chart. So bullish / flag pennant setups. We already talked about this. I'm not using RSI, relative strength index. The reason I'm not going to use RSI is because that is a lagging indicator, and that 50, right? And usually RSI needs 14 periods. And what is a period? A period is so let's say we're using a 1 minute chart, right? 14 periods in a 1 minute chart is 14 minutes. If you're using 5 minute chart, right? 14 periods in a 5 minute chart, that's damn near. So 12 is 60. That's 70. Yeah, 70, right? So I don't want to use RSI because, again, that's a lagging indicator. And because we're using 0 DTE, options that expire the same day, we want to be able to get real-time indicators. So using a lagging indicator like RSI isn't going to work here. So I'm just going to use volume as our confirmation, but we'll get there. All right, same thing, RSI. All right, so if SPY forms a bullish pennant and breaks out above 505 with a pennant low of 502, you could enter a SPY call near 505, stop at 501, 501.50, target 511 or 512. Option selection 3 to 7 days. Short term, since the pattern usually plays out quickly. VIX, a good balance of cost and management. All right. First, we do not want to use lagging indicators such as RSI or VWAP, etc. We rather use real-time indicators. So for the confirmation, spelling, okay, just don't get too much confirmation, we would like to use a volume confirmation of, let's just say 20.28x, right? All right. And let's just break down the entry now before we get to the other parts to make sure we are on the same page. So we're going to use pure price action plus real-time volume confirmation, no lagging indicators. We'll focus only on the entry logic now, confirmation and trigger, and we'll keep it mechanical so it can be coded later. All right, entry logic, the SPY pennant breakdown, price plus volume only. We assume that you've already spotted a flag and pennant bullish, and we're just going to wait for the breakout momentum, the precision trigger. The current candle closes above the flag pennant, the upper trend line. The volume on that candle is at least 1.28. The average, that's high. 128 times the average volume of the candle, and in candles, usually 5 to 10 candles, 5 to 10 minutes. That's high. Candle must close strong, meaning it must close at the top of the 30%. So the high-low average formula, okay. Enter call or go long on SPY at the closeout of the breakout candle or the next candle, the bearish. All right. So we are going to be using 1 minute time frames and want the volume ratio to be 0.88, not 0.128x. And then we are going back, let's do 5 candles, not 10. Now let's lay it out so we can review. This is the part of the process, right? You got to be able to, okay, time frame 1 minute, volume confirmation is greater than or equal to 0.88 times the average of the last 5 candles. No lagging indicators, pure price plus volume logic, context, average of the last 5, close at the top 30. All right, what do y'all think? 1 minute time frame, look back 5 minutes. Volume ratio is 0.88 and candle strength is 0.7. This could be a little bit lower, but hey, we'll see. Indicators used, none, is just price and volume. And the reason I'm not using those indicators like your RSI, your VWAP, your Bollinger Bands, your EMAs, right, your SMAs, right, because those are lagging indicators. Those indicators take damn near 10, 15, if not 20 periods, right? Remember, a period is a minute or whatever time frame you're looking at. We're looking at 1 minute. So those 14 minutes, 15 periods, 15 minutes, 20 periods, 20 minutes, right? Take a long ass time. And yes, I mean, if you're swing trading, swing trading is trading more than 1 day. We're day trading here, right? Or scalping or sniping, right? So in essence, what we're trying to do is find those fast signals. So that's why we're using pure price movement and volume confirmation to be able to find those are going to be our indicators and not your RSIs or your SMAs. Does that make sense? All right, beautiful. So a bullish case, SPY forms a mini bull flag at 505 and at 506 is the resistance. Oh, we didn't talk about support or resistance yet. So support is the floor, resistance is the ceiling, right? So normally when you buy when the underlying stock, let's call this SPY, when SPY crashes through support. You buy when it crashes through support because it just made a new low. When you ever heard buy low, sell high? This is it, right? So we buy when it crashes through support. So whenever you hear support, right, this is the low. It just made a new low, or it's touching its low, right? Whenever you hear resistance, it's touching its ceiling, it's touching its high. So we sell high, right? Once it breaks through resistance, that's when we sell, right? So what it's saying is that the 1 minute candle closes at 506, or excuse me, a mini bull forms at 505 with the resistance at 506. So this is the ceiling resistance, that's the ceiling, right? A 1 minute candle closes above 506 with a volume greater than or equal to 0.88 times the recent average. Closes near the top of the range. Enter call at a 506. The breakout candle closes below 503.8. Volume confirms. Closes near the bottom of the candle range. Enter a put at the breakout, right? Does that make sense? All right, so we have our entry. So this is how we're going to enter a trade, right? And here is our exit. So let's discuss the exits. Now, either TP equals take profit, right? TP1, 68%, TP2, 48%, TP3, 28%, right? Max hold time, 15 minutes. Stop loss. And what a stop loss denotes is that we're starting at $100, right? And what my stop loss is going to be is 20%. So that's letting me know that if the $100 goes to $80, get me up out of that trade, right? So our stop losses are risk mitigation, right? It's our way that we can exit the trade just in case it reverses or turns against us, right? So, okay. We exit if either of these conditions are met. Full exit, not scaling out. Does that make sense? Before we proceed with position sizing. Perfect. Let's talk about the exit logic. Both calls, okay. Take profit 1, 68% gain, 48% gain, 28% gain, 15 minutes. So it has 15 minutes. If trade hasn't hit any of the targets within 15 minutes, 15 minute one candle, exit immediately. 15 1 minute candles, exit immediately. Stop loss if the value drops 20% from entry, close the position immediately. How this works in practice: any given time you track the percentage change of the option since entry, not the SPY directly. We're tracking the actual option contract, right? The moment any one of the conditions is true, we exit immediately, no scaling out. This ensures consistent behavior and prevents emotional mid-trade decisions, right? Full exit, no scaling out. We close 100% of the trade once target or stops hit. First condition, whichever occurs first, TP, SL, or or stop loss based on 1 minute candles, applies identical to calls or puts. So here's an example. We enter the trade at $100 because one option equals 100 shares. So we enter the trade at $100. Within 6 minutes, the option price hits 168. That's 68% pop, right? We exit, done. No need to wait for the 15 minutes for other TPs. Bearish, we enter at $100. After 4 minutes, the price dips from 100 to 80. Now we have a stop loss, right? We exit immediately, no further monitoring. After 15 minutes, trade still is at 110. We made 10%, exit immediately due to max hold time. All right. Now we want to hit the highest TP target, right? But do not wait for it. If we hit at TP3, exit, but exit. Makes sense? Perfect. Now let's go over position sizing and trading session. For positions less than follow me. I know I'm saying at 100, but follow me. 499, we can use up to 80% of the portfolio balance. Between 500 and 1000, we can use up to 50% of the portfolio balance, and greater than 1000, we can use up to 20% of the portfolio balance. Only one trade per day. Session is 9:32. 9:30, missed the opening bell, all that chaos. 9:32 a.m. to 11:48 a.m. I love it. That makes total sense. Your logic is clean, risk aware, and scalable. We are dynamically sizing each position as a percentage of the current portfolio. That way, it auto adjusts as your capital grows or shrinks. Less than $4.99 up to 80%, 500 to 1,000, 50%, and greater 20%. Allocation capital is based on the balance at the entry, not the start of the day. So if no trades are triggered, capital stays untouched. We trade between 9:32 and 11:44, only one trade per day. Within the first 2 hours after the market, opens, capture the most momentum and volume, ideal for flag and pennant breakouts. In before the midday choppy, when momentum usually fades. If no valid breakout occurs between 9:32 and 11:48, no trades for the day. Exit logic, we aim for TP1, but if TP3 is reached first, we take it and we exit fully. Here's how it fits with the session. Open one trade per day. Once exit TP or SL or stop loss, no re-entry that session, even if a new setup forms. Next opportunity equals next trading day. Fully operational logic simplified between 9:32 and 11:48. We're going to watch for flag and pennant breakouts. If the signals confirm the price plus the volume, right, we're going to determine the position size by the balanced tier. We're going to enter the trade. While in the trade, we're going to wait for one of these to occur. Then we're going to exit. Would you like me to combine everything, the entry, exit, session, sizing, into one structured trading logic flow? All right, what else do we need? I have entry. We have the exit, the session, the sizing. Oh, strike selection. Strike selection. How do we pick the price, right? So for strike selection, we are going to use min delta of 0.15 and max delta of 0.44. And to select the strike, we need to come up with a proper weighted scoring system that will give each strike the opportunity, but select the best one let's discuss. All right, beautiful. Perfect. This is the key step. Since you're filtering out the best strike opportunities with the given delta 0.15 and 0.44, the weighted scoring system ensures you're not picking just the first valid option, but the optimal one for the setup. Go select the best strike, call or put among the available options that fit your strategy's risk reward profile and then probability of hitting TP1 through 3 using a weighted scoring system. These are just some of the rules, right? We're making the rules step by step of our algo. So follow me, y'all. We're going to start with the options that meet your base criteria. Boom, 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 boom. Expiration, 0 DTE. Okay, hold on. There's one thing I need to update. It's 0 DTE, not 1. Ticker matches the signal. Okay, scoring, delta, measure the sensitivity between the price and the reward, the option premium, the gamma, the bid and ask spread. Okay, this is a lot. I'm not volume plus open interest, confidence of the market, and time of expiration favors shorter duration. I'm not adding this because that's a lot. I'm not going to hold you. This adds complication that we don't need right now. That volume and open. Yes, and like real time is perfect, but backtesting, bruh. All right. A few things. We are going to be trading slightly OTM. Oh, we didn't talk about OTM and my fault. Let me talk about this real quick so you can understand what's going on. ITM is in the money, right? OTM is out the money, right? And ATM is in the money, right? So when we're buying options, right, we're looking for OTM and maybe slightly ITM. Let me explain. So we're going to be using the S&P 500, right? And let's say the current price of the S&P 500 is 498, right? So the current price is 498 and this is currently at the money, right? Because that's the current price. So that's the price where like the money is, right? It's at the money, right? So if we were to buy a call of 501 and 501 is our strike price, this is currently out the money. Why is it out the money? Right? Because it is 2 or more levels up for call. So what do I mean by levels, right? 499, this is in the money because it's super close to the 498. So that's in the money. That's just one level up. So that's going $1 up. So a level is like $1, right? 500 is still in the money, still super close to 499. Once that price gets to 501, it's now in the money. This is not at the money no more, and we're going to start making money. So for this strategy, we're going to be using OTM, out the money strategies, right? 2 or more dollars up, right? Puts work the same way, but it's just the opposite. So if we were to buy a put contract for 495, right? This is out the money, 2 or more levels down. 497 in the money, 496 in the money, anything less than or equal to 495, right, is out the money. That's me in my house. Now I have heard schools of thought for individuals saying that, hey, I use 5 levels or I use 10. I think 10 is ridiculous, but I've heard 10. I think that's ridiculous, but I've heard 10. Right? All right. Let's keep going. So that's OTM, ITM, and ATM, right? We want to print at the ATM, but we got to get our OTM at the ATM and ITM in the money. These are going to be really expensive because these are closer to the ATM, the current call price, right? But we want to be able to purchase OTM. All right, we're going to be using slightly OTM calls or puts for this, and this is going to be 0 DTE, not 1 DTE. Now let's discuss this part. Slightly out the money calls, not at the money or deep out the money. This gives you a better R&R risk reward ratio when your flag or pennant breaks out triggers. 0 DTEs means that the option decays faster, so your edge relies on the momentum and timing, not just holding time. Let's unpack this. Let's unpack what this means for your strike selection. Oh, I forgot to take this out. Directional moneyness. Okay. We want to remove the volume and open interest part of the weighted system. Now let's discuss it via TLDR. Too long, didn't read. So I don't get like tapped out for saying, oh, you're using too long. All right, pick the best strike, 0 DTE, slightly out of the money based on purely delta, gamma, and the cost efficiency, no volume or liquidity weighting. I want liquidity. Open interest. Okay, never mind. Expiration, slightly out the money, calls. Okay, puts. Okay, delta, the premium is greater than $10, matches the signal. All right, but I want premium. Okay, we're gonna add this. Critical for quick fills. Is the bid-ask spread there? Nope. So we want to add and bid-ask spread. Now let's discuss. Perfect. We're fine-tuning the weighted system for your 0 DTE slightly out the money trades with real-time execution focus. All right, gamma, delta, premium, efficiency, costs, expected move lower. Okay, better. And then execution preferred. All right. I love it. Now we have our scoring system. Perfect, perfect, perfect. All right, so this gives us our entry. We have our exit. We have our sizing. And we have our session. And this is how we select the strike price. Do we have everything? Do we have everything? Let me think. Let me think. Let me think. Let me think. Do we have everything? All right, fuck. We do. Let's slide. All right. Now lay out the strategy so we can review it from entry, exit, sizing, session, all parts, so we can review. Let's call this strategy. What do I want to call? So this is a bearish and bullish flag pennant. Pennies. No, that sounds weird. Just call it penny baby, bro. I just call it penny baby strat. Penny for your thoughts. I want to call it that. Penny for your thoughts strategy. You can call the strategy whatever you want, but this is what I'm going to call it. Penny for strategy. So trading time 9:32. Focus on high volume, momentum driven early signals while avoiding the midday chop. This is how we're going to enter. This is how we're going to exit. Strike selection. Beautiful. Position sizing. Exit. Operational summary. Okay. Detect. Perfect. Keynotes. This is the complete penny for your thoughts. Now, I'm glad what I'm going to do. 30%. Perfect. Give me an example. Bearish. Give me an example. I'm just getting it. So then when we go to Claude Code, it makes it just super easy. And all we got to do is paste this in. And then, y'all, we have our strategy. We have penny for your thoughts. Penny for your thoughts. So we're going to open a folder. Hold on. Let me make sure you can see. Let me make sure. All right, we're going to open a folder. Give me 1 second. Let's go to option baby. We're going to call this baby penny for you. Then we're going to open this up. Then, oh, should I use, remember saying something about composer one? Bro, I don't even know if I want to use that. No, I'm just going to use Haiku. God, that's crazy. Okay, so Cloud 4.5 is like top. Okay, Opius is top dog, right? Opius is top dog. Then we have 4.5. I didn't know they added agent or thinking to Haiku. Haiku is like the lowest model for Anthropic, so that's interesting that they added 4.5. But let's get back to our work. I'm not using this little side panel here. What I'm going to be using is Claude Code. So let me open that up. Boom. Let's get Claude Code open. Let me do that. Now remember, we only use 4.5. So let me go grab the comment. Let me go grab it for 4.5. Now we have 4.5. Let me make sure we do have 4.5. All right, we're Gucci. Let me close this out. Again, only use 4.5. All right. How do I want to start this? Let's start this saying, tell me, what do you know about option or algo option trading strategies? So I want to build some context, right? So once we build the context, then I'm going to be like, all right, bet this is a strategy that I have, right? And let's go ahead and proceed to build Z backtest for it. I know several algorithmic option trading strategies. We have the strategy Strangle and Straddle, Iron Condors. All right, this is cool. This is cool. These are all cool things. I'm not going to hold you. But guess what I have? We have our own strategy that we created. All right, review the strategy we want to backtest. Let's discuss and make sure you understand it. Then explain it to us like I'm 12 years old using an out of the box analogy, like television scenes. So we can ensure we are on the same page. I like to be a little different. All right, perfect. Oh, I should have gave it a cap or whatever. Let's keep going. All right, once I'm done with this part, then I'll show you all my other strategies bots after this. But like, I want to get this done because I'm super geeked about being able to create this strategy with you all. And I still have my own little edge, right, that I'm going to be adding to the strategy, but I need you all to stay to the end of the video, right? Once you stay to the end of the video, then you're going to see, okay, that's what, because every strategy is almost, I'm not going to say almost the same, but pretty much, kind of, sort of, maybe, probably, kind of. Okay, let me stop talking. All right, beautiful. So let me review the 0 DTE scalping strategy and let me explain it simply. Trade SPY 0 DTE on the flag pennant breakouts on the 1 minute chart. A single daily trade starting at 932. High gamma 0 DTE strikes for momentum capture, tiered position sizing based on the portfolio. Multiple profit targets with a stop loss of 20 with a 15-minute time limit. Bid-ask spread. Broken shows then 3, which is correct. Okay, hold on. Wait. You said bid ask spread. Hold on. Let me copy that. I'm going to paste this. Also need to do that. Let me come here. Paste this. You go there. The bid ask spread is, all right, so I'm going to answer that. Threshold is low for confirmation. Typically, nope. Stick with me. 15-minute hold time is aggressive for 0 DTE. The gamma risk compounds fast. Bro, just follow me, bro. Premium affecting CPE formula is not defined in your notes. Aim for TP1, but exit TP3 contradicts itself, needs clarification. No stop loss per day or week, only the stop loss on the 20% allocation. 60% drawn, missing the regime filter. I'm not using that. The gap day high volatility adjustment. What happens if multiple breaks out occurred before trade entry? The simulate, bro, just follow me. Not Dragon Ball Z. That's crazy. think of it like Dragon Ball Z when Goku powers up. You're watching Goku on a 1-minute timer and he's standing still, sideways momentum equals a flag pattern. Suddenly his hair starts glowing, a breakout candle, his powers level up, volume confirmation, the ground cracks under him, close near the high of the candle. That's your signal jumping on his back. But you have 15 minutes before he lands, or you need to jump off when you gained enough altitude, 68%, 48%, or 28%, or if he starts falling, 20%. Like Toy Story, when Buzz Lightyear chooses his jetpack, you want a jetpack with options that gamma boost your button 40% ways, response fast to movement, delta sensitivity, steering. Okay. What I want to do is we need assistance explaining the following. Oh, so you can see what I'm doing. Let me come back here. Boom. All right. I need you to explain that. And then I need this. And we also need this. Explain such that any LLM chat model will be able to understand what we are doing here without confusion. That DBZ one is kind of lit. I'm not going to hold you. Specific formula. How it's defined. All right, beautiful. If you want, I can rewrite the full penny strategy notes, including the correct premium, efficacy, bid, ask spread clarification, and single. No, this should be fine. This should be fine. This should be more than fine. All right. Perfect. Now let me go back here. You don't need that. You need this. Do I want to keep? Okay, let me just read this last one. 0 DTE playing hot potato. It's like the bomb in speed that explodes if the bus stops under 50 miles per hour. This is, if I was a 12-year-old kid, bro, reading this, whatever. 0 DTE is the ticking time bomb. The value loses second every second, theta decay. But if the bus speeds up, SPY momentum, they explode in value gamma. You're betting you can ride the momentum for 15 minutes max before theta comes. Review the following and advise if this answers the questions before we give you the info needed from our reference backtest and review the data we have for SPY. Just so I can go get that reference backtest real quick. And this is another folder where I keep, this is everything, where everything is housed. So what I'm looking for is the SPY data. SPY data is here. SPY. And a Parquet is a file that makes it a lot easier for computers to read. And it's like a better CSV. Okay, and put my SPY data right here. I reviewed what you're asking me to do. Let me break it down so I understand. Review the clarifications you provided in the bid ask spread. Check the answers. Still need clarification. The expected move for the PE. What is your target price? Is it based on the take profit 1 or 2? The at the money disc? Okay. Hold on. I can delete this. Review. We're still getting questions. Let's answer them. So any LLM chat model can understand it. So you can see I just pasted the questions in there. We're using TP3 as the expected move for the PE calculation. Reason TP3 represents the minimum accepted gain for the full exit. Use TP1 would overweight the OTM option, and this would rarely hit the max target. Using TP3 ensure we select options that are practically reachable within the first 15 minutes. Example, spot SPYs at 440. TP3 is 140 to 148. Okay, bullish, option premium, expected move. Okay. LLM friendly. Okay, aim for 1. 3 doesn't exist. Volume threshold, delta. Should we exclude? Too far. Okay, 1 trade per day. If breakout fails immediately, then hit the stop minute. Can we take another? No, 1 trade per day. All right, perfect. This is the answers that I need. Excuse me. All right, let's go here. Review and let's discuss. Yo, we're really making good time. I'm not gonna hold you. Like it usually takes me like 90 minutes, maybe close to 2 hours sometimes before I can even get to coding. So I'm glad that like we're making great time, y'all. So I'm just flushing this out with ChatGPT. What I'm gonna do is just grab my data again because JIT was tripping. And then what we also need to do is grab a back test. Let me grab that's whose back test I want to grab. Let me grab a lot of that's machine learning. Let me grab Mini Bears back test because this is spy, this is spy. So copy, perfect, review. It's still wide. Okay, more realistic. TP3 for option premium selecting is not the underlying price. Example, expected underlying move plus break even plus some buffer. Estimate the underlying move for the 28% gain using the depth approximation, or use the strike distance from a spot as the expected move. My suggestion, should we split into tiers? No, keep it the way it is. Might miss breakout. I want to keep it the way it is. 0 DTEs lose 60. Okay. Have you considered shortening it to 10 minutes? I'll get there. 1 trade per day. Okay. Clarify how we should expect the backtest format. Yes, I do have it. All right. Review and answer. All right, beautiful. Now we have our response. Plus the buffer. Okay. This works. And if this just gets a little bit too complicated, what I'm going to do is just remove this shit. I'm not going to hold you. And keep everything else the same. Volume, ratio, min, max, delta. What else? Hold time. And hold time. Advise if you have the context / clarity requested for the PE formula. All right, let me try this again. Holy the fuck. Nope. I need data. We repping data. 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 We repping data. 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 We repping. Ooh. 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 Boo. All right. Notes. 1 minute. Bullish, bearish put. Intentionally moderate. Ratio close to the top. Excludes far out the money. Who told you that? I didn't tell you that. I'm going to go to 0.5 because I didn't tell you that. Max hold time. 1 trade per day. No re-entry. Okay. Then score remaining. Full exit. Position sizing. All right. Only thing we are starting at min delta of 0.18. You ain't gonna, don't listen to me. And here is the data information. Review, run a series of terminal commands to understand it. Then we will provide the reference backtest before we develop it. We repping data, data. We repping. Ooh, boo. I got to keep myself entertained. One way. That's how I keep myself entertained. All right. All right. Yes. Yes. This is great. This is great. I am just waiting for Claude to go through the data that I provided it. Perfect. And once it has the data I provided it, then it'll be able to slide how we want. So this is beautiful. Okay, let me hit enter. Deep dive on the Greeks. Deep dive on it. I'm sorry. Yeah, sorry. Oh, you know what I need to go get? I thought I brought it over, but I guess I really didn't. I thought I brought it over, but I guess I really didn't. I'm not gonna hold y'all, man. This is how I stay sane, bruh. Like, I'm on this Evening day. This is how I stay sane. Penny for you. Rename. What I want to call this? Reference backtest. Gamma is missing from the Greeks. We need gamma. Okay, gamma is there. That doesn't make sense. Gamma is there. Check again. We have all of the Greeks for this. Okay. Gamma is missing from the Greeks. We need gamma. Open, high, low, close is not indexed. Currently ranged. The Greek data has for deep in the money only 160 rope. Okay. Yeah, because I really think you're like big tripping, homie. Ooh, 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 boom. I told you, bruh. Like, I don't know what you screaming, man. Get me right. Get me right. Get me right. Gamma is missed. That doesn't make sense. Calculate gamma from the. Okay. That doesn't make sense. I have delta. Okay. This doesn't. This really doesn't make sense. Um. Copy. I don't think that's gonna. Hold on. Okay. How do we have all the other Greeks, but not gamma? Something's fishy here. Triple check because we've used this before, homie. You repping? Ooh, 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 boo. This doesn't. You're right. Let me check the original. Oh, I don't think it's gonna be there. You're right to be suspicious, but gamma truly isn't in the source data. The CSV files from your data provider doesn't include gamma. Your data source calculated delta, theta, vega, rho, lambda, IV, but skipped gamma. This is unusual, but not unheard of. Some providers calculate Greek selectively. Okay, solution. Okay. We're probably just going to drop gamma, but for my sanity, read, then run a series of terminal commands to theta data and make sure gamma is available. We repping data. We repping. This just doesn't make no sense. This just makes 0 cents, home. 0 cents, fam. Like how we have, I'm talking about like every the fuck other Greek, bruh, but no gamma? That's suspicious. That's weird. Mentions gamma via EOD, but the source CSV only has theta data, first order. Okay, gamma rate of change. Second order is charm, vena, voma. I never heard of these. Charm, vena, and voma. Drop, gamma, calculate. Okay. All right, we are going to drop gamma, unfortunately. Review. And now let's talk about how to create the backtest for the strategy we are developing here, homie. Let's see how we gonna do it here, big homie. Cause you know we ain't gonna deal with no busters. I am not from Cali. I am not gonna hold you. Accents sometimes just come out, bruh. Again, I gotta keep myself entertained somehow. But y'all still getting great work. Y'all are still getting fantastic work, fam. All right. Then it's going to output and be like, oh, this is how we're going to create it. Thorough, though, validate. Sometimes I really don't like when they do that. I'm not gonna hold you, that little copy shit. Pattern detection, new functions, modified, change to. Do we simplify? No, we don't simplify. Keep reference. No, Jit, no. This is merely to show you how to create the backtest, but we are not copying any of the previous strategy to this. We are still using what we discussed, homie, and not simplifying nor adapting. We want to backtest this and do not want to adjust until we see the results, big partner. Now let's discuss quickly via TLDR if you understand how to create the backtest before we proceed. Appreciate you. Like sometimes I ain't gonna say you gotta get belligerent, but bruh, I ain't asked you for none of that. It was trying to recreate the strategy, and this is sometimes I don't like using, like bringing over examples, because sometimes shit like this could happen, right? Where the AI, and this is how AI sometimes can be dumb smart, right? It's taking it and it's like, oh, you know what? I could just copy it and just modify it. Oh, but do you want me to modify this strategy too so you can use another strategy? No, bruh. I want you to use the The pennant flag strategy that I talked to you about, not this other one. Yes, I understand the okay for each trading day. Beautiful. Pick the highest. Core, data loading, strike, position management, analysis, detailed information I got, the data I have access to, questions, pattern detection, simplicity, level, full trend, based on or no, 5-bar consolidation plus breakout above, full trend line based flag pennant detection, or simplified 5-bar consolidation plus breakout above average. Data validation first. Should I load 1 day, print the sample strikes with the scores, validation logic, or go straight to full back test? Okay, hold on. One, why are you advising that we simplify it to the 5-bar consolidation? Is that the same strategy without changing it? What is the point here? Make me understand this via TLDR. No, full back test. Format. Bruh. All of the above. Your strategy is not referencing the backtest codes. The reference is to show me how to structure it, how to loop, how to... No shit. That's why I gave it to you. This is why you have it, so you can use it as a reference. All right. Sometimes you just got to get like... Rrr, with the little AI, man, because it will trip. This is part of the tripping. Now, can I start coding, homie? Bruh, if you don't get the fuck... Y'all see this? It's... Bruh. Flag pennant patterns are complex to detect algorithmically. The hard way is the true flag pennant. Detect a prior trend and post move. Fit trend lines to the consolidation high, low, and then confirm the trend lines are converging the pennant and then the parallel. Validate the breakout continuation. 100 lines of code prone to false positive. Easier proxy. Check if the price breaks above the recent 5-bar high, and then check if the price breaks below the 5-bar. Okay. Add volume plus candle strength filters. This captures the same movement without the complexity. Okay. All right. Full back test. Y'all see this? Now answer one so I can start coding, homie. If you don't get the fuck, bro. All right. All right. We can use the proxy as you mentioned it. That's straight, bruh. I just thought that was funny. That's straight, bruh. Let's call the strategy penny for your thoughts. bt.py. And let's proceed. I just thought that was just kind of funny. Can I start coding now, homie, bruh? You little buster. Funny ass. You little buster. I can delete that. Oh, you know what we need that I forgot to do? I need my folders. I need my folders. I need my folders. All right. Let's go try this little bullshit and see how this little cursor one or composer one create a folder called backtest results. Then within that folder, create subfolders for 2022, 2023, 2024, and 2020. You might as well do 2021. And within those subfolders, create V1 baseline, Add 2025. Let's see what you're gonna do. Let's see how you're gonna move. That was quick. That was quick. This is exactly what I wanted. Once I get my results, I put them in there. Once we get our results, we put them in there. Once we get our results, we put it in there. All right. Come on, fam. Waiting for the we're gonna. Oh, you know what I should do? You know what I should do? Let's get everything ready for this back test. Our beautiful penny for you is ready. And I'm just waiting for the back test file itself. There's the back test file. Penny for your thoughts. Let's go ahead and run our back test. Data. All right, perfect. So we're running our back test first. Now remember what a back test is. A back test is being able to take your strategy, your algorithmic strategy, the strategy that we've taken the time to be able to build. We're going to drop it in a time machine and see how well it performs in 2024. Now, if a strategy performs well in the past, there's a high likelihood that it'll perform well in the future. There is no guarantee, but there's a high likelihood that it'll perform well in the future. So that's why I want to back test our strategy to be able to see how well it performs, right? So what we're doing right now is back testing on 2024. Now we just had 2 trades that came. So we had like a 50% win rate. One we won and one we lost. So let's see how this strategy performs for the full 2024. And again, we started at $100. So you saw that we started at 100 and now we're going to be able to matriculate through this. So let's see how it performs. So I think, bro, it's like a 50%. We win one, we lose one. We win one, we lose one. We're going to do better. Don't worry, we're going to do better. 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 Because I have an idea. Okay, 2 straight before a loss. I have an idea. Hold on. Strategy just crossed 500. Look at that. So y'all seeing this live? Strategy just crossed 700. And all of our strategies start at what? A honey bun, $100. So let's see what this strategy is doing. All right. It looks like we probably found something. We probably found something. How you lose 8? That's crazy. That means you barely found one. Is it gonna cross 1,000? Is it gonna cross 1,000? It's at 900. Oh, it just lost $200. That's the biggest loss I've seen so far. That is the biggest loss I've seen so far. So the strategy right now is oscillating between like 700 and then cross 1,000 and 900. Okay, it's crossed 1,000. We're at 1,000, y'all. All right, let me shut up. Let me see what it's going to do because it seems like it's a little shy. As soon as you cross 1,000, drop right back down. So we're at 1,300. We're at 12. Now I'm interested to see what the win rate is going to be. I'm interested to see what the Sharpe ratio is going to be. I'm interested to see what the max drawdown is going to be. The strategy is at 1,900. Let's see how well this does. I'm not going to. Strategy's at 2,300, y'all. Strategy is at 2,300, y'all. Can we cross 3? Can we cross 3,000? Can we cross 3,000? And I know, never mind, I ain't even gonna say it because y'all don't think it's like Capiana. I was gonna say this is not the highest backtest I've ever seen. It crossed 3,000. Strategy just crossed 3,000. Beautiful. All right, it's almost done. Can you cross 4? Can you cross 4? Can you cross 4? Oh, you just crossed 4,000. All right, hold on. Seemed like TP3 was doing all the heavy lifting. We did get a TP1 hit, but TP3 was doing all the heavy lifting. All right, what's the win rate? Wait. Win rate is 63%. We had 96 trades. Sharp ratio is 0.44. I mean, it ain't horrible, but it still could use some work. Max drawdown is 45. That's kind of bad. So what max drawdown is letting us know, we're starting at $100, but the strategy dropped down to $45 at one point in time. But it was able to rally, right? And the strategy finished at $4,027.65 after 96 trades. Profit factor is 295, so that's not horrible, right? So what profit factor is letting us know is that for every dollar that we're losing, we're almost making $3, right? So what I'm going to do, all right, big homie, let me go ahead and bring our results over. Yeah, but I beat you to the punch. Yeah, but I beat you to the punch. Dum, dum, dum. There we go. Review. And let's discuss. Thank you, homie. So that's not bad. I guess I should go write that down somewhere, huh? It was 4,027.95, 4,027.65, 4,027.65. Our base one is 4,027.65. Okay. Hola. You hear me now? I am not Jamaican. Sometimes I just catch an accent. Beautiful, beautiful, beautiful. All right. Oh, crap. Oh, crud. Okay. Hold on. Back test results V1 2024 baseline new high. That was 4,027. What is it? 4,027.65, right? All right, beautiful. All right, bro, you gonna stop calling me homie, bro? I'm not gonna hold you. TV28. All right, penny for you. Backtest results 2024 started at $100. We ended at 4,027.65. Total return was 3,928. This is off 96 trades, 63% win rate. Profit factors 295. Max drawdowns 45.4. TP3 is the workhorse. I already told you that. Break even of the time stops, we lost $1,700. TP3 does all the heavy lifting. Almost 50% of the trades hit, 28% generating most of the profits. Only one trade hit TP1, the 68%, suggesting that TP1 might be too aggressive or 0 DTE. The time stops are mostly break even. The strategy captures the quick moves or exit naturally. Time stops hurt. 24% of the trades hit the 20%, losing 1734. The trade performance, the average hold time is 7.5 minutes, 7.7 minutes. Average return is 14%. The best trade was $318. The worst trade was $202. The average trade was $40. Analysis, very fast strategy. Average hold time was 7.7 minutes. Fit to 0 DTE perfectly. Positive expectancy, right, with 40.91 per trade. The best trade hit TP1. Only time it happened, huge outlier. Worst loss exceeded the negative 20% stop loss. Suggests that the slippage or gap through stop. All right, risk management. Below 1 is risky. Above 1, recent downside control. Excellent. Severe but recovered. Sample trades. Trade 1 was a winner out the gate, 64% out the gate. Trade 33 was the worst loss. Trade 41 was the best winner. Issues is the stop loss exceeded 20%. Trade 33 exited at 25, 44% loss, not 20. 49 is a similar pattern. Cause is the likely slippage or illiquid options grabbing through stops. Oh, gapping through stops. Add the bid-ask filter tighter or use a negative. Okay. TP1 is too high. Only 1 out of the 96 trades hit, 68%. Consider lowering to 50%. Position sizing on large contract. Worst loss was 10 contracts, 80%. Account was 970. Risk 40. Risk for 40, 45%. Fix. Okay. What I'm going to do. What do I want to do? 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 Okay, before that, let's go get organized. Let me get 2 baselines before I even. I'm gonna get a baseline for 24 and then 23 before I even do anything. So let's move into 2024 V1 baseline. And then this should work like this, where I go here, I go here, and I go here, and I put 2023, and it should load 2023. Is it? Oh, no, still loading 2024. That's funny. 2024 year. That's fine. Just go ahead and put 23. I thank you. Your awesome sauce. There are some back tests I could just put the year at the end. I can just put the year. Okay, we're running it on 23. This was 24. Now we're going to get 23's baseline. Before I start adjusting anything, back test. Oh, back test results. V1 2023 baseline. New high. All right, let's load our back test and let's let that thing run. Oh, here we go. First trade was profitable. Let's see what this screaming. Let's see what this is doing. Y'all think it's going to be higher or lower than 2024? Go ahead and put it in the comments if you think it's going to be higher or lower than 2024. I think, fuck it, I'm going to say higher. I'm going to go with y'all. I'm going to go say higher. I'm going to say higher. I think it's going to be higher than 2024. Right now we're in February. We just crossed over to March and we're at 156. I'm still keeping my assumption. So I'm gonna go grab some Yo quiero agua and I'll be right back. All right, so it seemed like TP3 did all the heavy lifting again. And that's fine. TP3 win rate is at 50%. 130 trades. 65 trades we won. Made like $1,100. So I was just under, not just under, about like 4 times. Okay. Review, and let's discuss now that we have 2 baselines for 24 and 2023. Want to discuss adjusting parms. We have a few in mind. Let's compare notes. All right, beautiful. So now we have an actual. So we have results for 23 and 24. So I'm super geeked about that. So now what I'm going to do is let the backtest, or excuse me, let Claude being able to confirm. Okay, you know what I forgot to do? I have to write down our results. 1,099. Beautiful. Now we have our results, so y'all can see that. Our results, I just wrote it down. Oh, you can't see it. Results are Gucci. So now we have a baseline for 23 and 24. Now we're going to start adjusting the parameters. Let's review so we can start thinking about which ones. And this is the optimization part, right? There's different code that we can use in order to optimize, but I like to do it manually so we can see, okay, oh, wow. You're only supposed to be trading till 11. So the fact that you're doing, all right, so I need to update the end time to 11:44. I didn't know that was it. I'm glad I looked. Update the end time to 11:44, and then I'm only going to do one. This look back, I'm going to do 3 minutes instead of 5. Yeah, that's where I'm going to start. And drop this to 58. So I'm going to drop this to 58, and then update the time to 11:40. So let's write this down. What are we going to do? We are going to update the time, end time to 11:44 a.m. from, is that 4 o'clock? That's military time. EST. Also update the breakout look back bars from 5 minutes to 3 minutes, and then also change the TP1 from 68 to 58%. All right, so that's what I want to do. Let me see what JIT has. All right. Aggressive, conservative, proposed, aggressive, West 28, 35. All right. Nope. I already have an idea for that. Delta ranges, raise from to avoid, far out of the money, then avoid. Okay. Max hold time. Oh, I'll go to 12 minutes. So I'll do that. Oh, hold on. Y'all can't see this. My fault. So it's recommending that we change the TP levels. I'm only going to change one TP level, and that's TP1 to 58. I'm not doing this one yet. I'm going to keep the delta ranges the same. I'll update the max hold time. I'll do that. And max hold time from 15 minutes to 12 minutes. I'll do that. And I don't want to do too many things because we're doing this end time. That really isn't one. That's right. That really isn't one because I don't think trades get in like much later anyway. So we have 1, 2, 3. I mean 4 if you want to count the end time. Oh, or more signals. And then scoring, add gamma, we can calculate it or adjust. All right. All right. This is what we are thinking. We want to, okay. I'm not going to retype that. So I'm just going to copy. And then keep it at 2023. All right, so let me move 2023 baseline. 2023 V1 baseline. All right, 1144, 3, 58, and 12. Thank you. I'll run it. So let me go ahead and write V2, C parms. Whoa. Has the parms which we have updated. Backtest results 2023. New high. Perfect. Let's come back to our backtest. Get this ready. And then let's go ahead and run. All right, what do y'all think? Higher or lower? Higher or lower? Higher or lower? Let me just get our full strategy parameters. And let me put it here. Penny for your, okay, I just want to make sure it's not running. Penny for your thoughts. Beautiful. So we have the complete strategy parameters right here. And backtest is running. Oh, wow. Oh, excuse me. We may have hit something, y'all. We may have fell forward. We may have felled forward. I'm not going to hold you. I wasn't expecting that. We may have hit something. Oh, I didn't answer the question. Damn, I'm looking. I want to say higher. Yeah, I want to say higher. I want to say higher. Yeah, I'm standing on that. So right now, the strategy, we're backtesting it on 2023. We're in March, and the strategy is at $200. It's oscillating between like 200 and 160. Damn, this max drawdown. It just crossed 500. So let's see what it's screaming. Oh, you ain't catch nothing on 420, huh? Just crossed 1,000. Let's see if you can maintain. Hold the line. Oh, it's holding the line, y'all. It is holding the line. It's just crossed 11. Okay. It's lost 85 cents. With this 85 cents was super weird. Held it for 12 minutes. We were up 9% at one point in time. It's at 1,500 and we're in June. We're in the summertime. And the strategy, it ended. This new high was 11.99. So let's see if we can maintain. Let's see if we can maintain. I think we can. I think we can. Let's see. We're about to finish July. Summer months are coming to a close. Strategies at 1,400. It's oscillating between like 11 and 1,400, 1,500, right? The resistance, right? Because remember we talked about it. The resistance of like 1,500 is keep being tested, but it's being rejected. And the support of 1,100, let's call it 1,200, that keep being tested and rejected, right? So we're finding our mean reversion right around like 12, maybe 13. But there's a lot of days that we again. See what I mean? But this is, I'm not going to hold you. This is one thing that I can appreciate about it is because we're not revenge trading. So it's not like, damn, I lost money, I got to go make it again, right? No, we go to the next day, you know? But the only thing is that it peaked at like 1400. See what I mean by the oscillation, bro? See what I mean by just going back and forth between? It'll test new resistance, then it'll get rejected, then it'll go back to its average. It's kind of crazy how like support and resistance will work, like outside of the context of them. I mean, still kind of the same, right? But this is a back test. This isn't candles, but it's still support and resistance levels. So that's interesting. All right, I am seeing a few things. What are you all seeing? Go ahead and type in the comments. What do you see during the back test? Because you can see something different than what I see, right? What happened to the win rate? Win rate dropped. Profit factor dropped. Max drawdown got a lot worse. We peaked at 15, but we ended under. That's crazy. We peaked at 15, but we ended under, bro. All right, something I'm doing wrong, and that's okay. You gotta admit that there's something I'm not catching or seeing. Review and let's discuss. There's something I'm not seeing because the win rate dropped. The win rate was at 50%. It dropped down to like 46. The amount that we won, or the final, is at 1164.41, but before it was 1199.98. So that's interesting. So let's look at the trades and let's find out what happened. Was it the fact that we updated the hold time? No, the max hold time, that's going to have no impact because the trades stop at 12 o'clock anyway. So you can't buy trades after. Always. So the look back, we went from 5 minutes to 3 minutes. That may have a change there. Or is it the max hold time? The dropping the take profit from 68 to 58, that's not going to have that big of an impact. That's just going to make it easier for us to win. But the win rate got worse. So I think it was the look back, right, from 5 minutes to 3 minutes. Maybe that's what the issue was, because the max hold time, I don't think that. I mean, average was 7.5, 7.7. What's the average here? Average hold time 8. So the average, even though we dropped it, average hold time increased. That's interesting. That's interesting. All right. We lost 10 trades. 10 more signals. TP3 hits. So we have 3 TP3 hits. Faster timeouts. Original 5-bar 15 minutes. Updated 3-bar 12 minutes. 3 percentage points worse. We have 10 more trades. Win rate dropped. Profit factor is worse. Max drawdown is a little better, but shit, that's still a bad. Anything over 40, 30, right? Psychologically, you got to be able to take that. Like you're having your $100 go from 100 to 30, 37, 30, 37, 33. I'm sorry, I was doing a little math in my head. 33, 32. Can you handle that? But it rallies to 1,000, right? Can you handle that? Average trade is worse. Average hold time. Okay. Oh, not. I was comparing it to the other, so it's 8. Okay. Key insights is more false signals, 10 more trades, 8 more stop losses. Win rate dropped. Conclusion is 3 bars is too aggressive. Catches whipsaw, and whipsaw is like a whiplash, right? We'll catch it up, but then it reverts against us. It goes against us super quick. TP. Okay, this is working better. This is working. Monitoring entries. Okay, we lost 10 trades. Suggest 10 signals in the morning, but quality dropped. 2024 didn't have this issue. 2023 was choppier. Issue 1 is a 3-bar look back is too sensitive. Okay, choppy entries not confirming momentum. Fix. Let's try 4. 37% stop loss. Potential fix is raise the candle strength. Add requirement note. Widen the stop loss. My recommendation is stricter. No, what I want to do is we're going to look back from 4. Nope. We want to test look back of 4 instead of 3 and keep everything else the same. So let's get organized. All right, perfect. Let's get organized, fam. Make a folder here. This is V2. This is time change. This is look back. What else this is? This is TP change and max hold time. I like to get the to write what the what do we change, so when I reference it, it's like, oh, okay, so that's what I did, right? So it makes it easier. Damn it, bro, I told you to move it. So you tripping now. So you copying and not moving. Bruh. Next time, move. Or I will go get somebody else. Composer. Sometimes you got to talk back. Like, bruh, come on. Tighten up. So now this is, what is this? V2. This is V3. Look back of 4 minutes instead of 3. 2023. New high. All right. Beautiful. And our back test is loading. And our back test is running. So let's see what's really good, ladies and gentlemen. Let's see what's really good. Our back test is running on 2023. And what we're looking for right now is a better win rate, a better profit factor, and a better max drawdown. If we can achieve these items, then I know we're making progress with this strategy. Right now, this drawdown is fucking hurting, kid. How do you go? We went for $400 and now we're at 138. Drawdown of like almost $200. Stay above, fam. Stay above. Hold the line, man. Hold the line. Hold the line. We're in March and we're at $310. These choppy conditions, I'm not going to hold you. It just crossed 1,000. We're at 1,200. We're at I should have said higher or lower. Go ahead and write in the comments what you think this strategy is going to end at, higher or lower. Our last version was 1,164.41. If you think it's going to be higher, go ahead and put higher. If you think lower, go ahead and put lower. So let's see what's going to pan out here, fam. See, the thing is, lost $65. Was it positive at any point in time? No. Should we test this on, because I know QQQ has gamma. I kind of want to test this on QQQ as well, but I don't know. I don't know. And the reason we're using SPY, again, SPY does have those tech companies that are in QQQ. So we're still getting NVIDIA. I'm still getting Broadcom, still getting AMD. I'm still getting Meta, Apple, Google, YouTube, right? Netflix. All of those are in S&P 500. The only difference is that the QQQ is more tech heavy, right? So instead of having diversity, right, where it's just not all tech, QQQ is straight tech heavy. So I'm thinking that's what I don't understand, is that we're giving back way too much. We are giving back way, way too much right now. I don't think 4 minutes is it. Yeah, I don't think 4 minutes is it. Look what happened. We're at $100. Bruh, we just gave back damn near $800 back to the market, man. Who wants to do that? Like, psychologically, who wants to do that? There is something that I need to adjust. So it seems as if maybe I need to, what if I kept the 4 minutes, or excuse me, what if I went back to the 3 minutes and then made the requirements a little bit more strict? Meaning, what if we said, all right, you know what? I'm just going to let this back test run and just whatever the results are, we'll get there. Where is it? Where is it? Where is it? Okay, instead of the candle strength being 0.7, right? Let's try 0.8. Instead of it being minimum breakout, let's try points. So I'm going to make this stronger. I'm going to drop this down to 0.4 and make this stronger. All right. Win rate. This is just horrible. I'm not even gonna. $200, bro. We peaked. Look where we peaked though. Max drawdown 88. So nah, this is not. This ain't it. This is not it, fam. The 3 minutes was better. That's crazy, right? What am I saying? Review and let's discuss. All right. Crazy. Crazy, fam. TP1 is 58, not 68. So you still haven't updated that part yet. Stop being lazy and update it, man. I'm gonna tell her to do it afterwards. Don't worry. I peep gang. Yeah, I see it. And hopefully I'm gonna get this done. I don't know. I'm gonna try, but I don't know if I'm gonna be able to paper trade tomorrow. I'm gonna try, but I don't know. 3 bar look, but yeah, I told you it was bad. I told you it was bad. And it just bled money. Revert to 3. Yeah, that's okay. This is exactly what I was thinking. I'm gonna go back to 3, but I'm gonna make this more strict. That's exactly what I was thinking. Yes. Let's go back to 3. Look back, and instead of 0.75, let's do point. All right, let me just do option. Let me just stop. All right, let's go to 3 and candle strength of 0.75 and keep volume where it is at. Oh, got to do that. So failed. That's what I'm just gonna put V3. Oh, I told you delta max. Also delta max of 0.4. This is V4. We're doing look back of 3 minutes and candle strength of 0.75 and delta max of 0.4. Okay, let me go ahead and get you lined up. Excuse me. 2020, this is V3, 2023. What is this? 4 minute look back. But you moved that one? Oh, so you heard my little threat. 2023, 4 minute look back. Perfect. All right, now we are running version 4. Then after this, I'm going to switch over to 2024. So we're not overfitting. 2023 backtest results, new high. All right, let's see what this thing's screaming. Let's see what it's screaming. Let's see if we can. My biggest thing is, can we not give back as much? Can we hold on to the bag? It's okay not to give back money, bro. I don't know. It's a little weird. It's a little weird. It's a little weird, homie. I mean, right now we're at 374 and we're in April. Should I widen the... Okay. If we can get it to be able to not give back money and I could keep the stop loss at 20, that'll be great. Because I think what I may need to do is just increase this stop loss from 20% to like 25. Give it a little bit more room, right? And let's gauge the performance, because right now it just crossed 1200. But again, being able to give back money is this little strategy's characteristic right now. And I want to fix it where it's like, all right, let's keep some of the money we make, man. We don't got to give it back to the streets. We can keep it in our pockets. We can definitely keep that in our pockets. See what I'm screaming? Oh, that's what's up. That's nice. I just wanted to check something real quick. So it's at 1100 right now. I really think this is going to be a matter of being able to widen the stop loss right now. Yeah, because I think I need to widen the stop loss. Or do I? It's at 12. I mean, it didn't give back. It wasn't like before when it was just like disrespectful with the amount of money that it gave back. How you up 1300 and you end at $200? I'm like, come on now. So what I'm waiting to see right now is what levels is it at. I'm very curious. I'm very interested, excuse me, to see if the win rate is going to be north of 50. What is the Sharp ratio going to be? What's the profit factor going to be? You know, because right now we're at 1122. Could we have ended at higher? It peaked at 14. Where's the win rate? Win rate, win rate, win rate, 45%. Profit factor 1.3. Best trade 200. Worst trade 145. I am really of the I think. I mean, sure. What is that? Is that 12? Is that no? That's worse. So yes, we're better than before, but it's not the best. Review and let's discuss. Have an idea of widening the SL. Advise if this is the best course of action. What is the data telling us? What is the data telling us, homie? Oh man, I gotta make it. I thought I was gonna have more time. The little 13% compact. I mean, that's fine. That just means we're going to open up a new session. But before we open up a new session, I need to have it create our journal for this strategy, because every strategy that we make, I mean, I haven't done it for the past few, but I want to start getting better with it, is being able to maintain a journal. Let me show you an example of one. Here's the journal. Right? What is the strategy? A 0 DTE lottery ticket strategy for SPY breakout signals. When did we start it? October 24th. The status, V4 parameters finalized and validated October 25th, right? SPY, 0 DTE, what is it does? Starting capital, entry window, signal type, the parameters, risk adjustment, so on and so forth. So I want to make one for what we're doing right now and bring it over to here. All right, perfect. All right, hold on. Let me go back up. Versus stricter filters, worse. Oh, it's a little 8% better. Essentially the same. Exit confederation, better PNL. Missed 2 TPs. Okay. Sample quality, data. Okay, stricter, best winner. Evidence across all tests, stop loss, average stop loss, worst stop loss. Even with stricter entry filters, the stop loss still exceeds 20%, 37, 110, 28% damage. The root cause is a slippage on illiquid options. We're entering at 0.28 to 0.60 low premium. When stop triggers, the bid ask widen. We can't exit at -20, gaps up to -30 or worse. Whipsaw reversals, the breakout fell immediately. No chance to exit at -20, straight through. High volatility. Options move 50% in 1 to 2 minutes. Stop loss can't execute fast enough. Your idea is to widen the stop loss. What the data is telling us, the current reality is the average stop loss is between -25 and 30. Worst case scenario is -40 and -60. Option A is to widen it to 28%. Excuse me, matches the actual observed stop loss behavior, avoids the premature exits on whipsaws, and more realistic for 0 DTE volatility. Larger losses when wrong, lower profit factor if win rate stays the same. Option B, widen the stop loss to 30 plus TP3. Lower for easier hits. Could be catastrophic. Add a trailing stop. See, I don't like adding trailing stops right now. I'm not going to hold you. I'm not going to lower TP3. I am going to widen. All right. Let's widen the SL to 28% and keep everything else the same. And also, let's create a journal for the strategy. See as reference, then create. All right, let's get you filed away. This is V 2023 V4. This was look back 3M and stricter filters. All right, beautiful. Let's run our back test. Let's run our back test. Well, I did say I was supposed to do it on 20. All right, next time I'm doing it on 24. Next time I'm going to run it on 24. So we're running our back test on 23, and we've updated a few items, and I'm interested to see how that's going to work out. I think we're going to get a little bit better results, right? So let's see how this pans out for us. What we've updated is the stop loss. We went from 20 to 28, and I think this is going to allow brevity, fam, and us giving back less money. So let's see. Let's see. I saw like 4 stop losses so far. And the account didn't balloon to 300 like last time, remember? So maybe this widened stop loss isn't. I don't know. I don't know. All right, I figured that was going to happen. I don't know. Okay. Trade 0 DTE options on intraday, flag and pennant breakouts using the weighted scoring system. Breakout. Okay, beautiful, beautiful. I'm glad we were able to get all of that before. All right, perfect. I don't know. I ain't really too keen on this, homie, because the results ain't that rolling. Being up $800. Hmm. 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 So I'm just waiting for the back test to run right now. I'm just curious to see if the win rate is going to improve, max drawdown going to improve, is the profit factor going to get better? Are we? I still think we were giving back too much money. I think being at 28% is maybe a bit too wide, and that maybe I'm going to go to 25 instead of 28, because the 28 isn't as optimal as I thought it was going to be, like being able to give it a little bit more room. Look, it just gave back all the money. So that's what I'm saying. Like we're having the same problem like we had with the 4 minutes. And this is part of the process. Part of the process. Part of the process. Look how much money we just gave back. We was up. We was like $900, $800. All right, what I'm going to do now, we're going to take a beat and we're actually going to review the previous results of the back test And then we're going to figure out, okay, what is the data screaming at us? Because we have 4 rounds of back tests now. And we're giving back way too much money, you know, and I think is this maybe what is it, the stop loss? Is it the strikes? Is it the deltas? Something I'm not accounting for. You already know it's the win rate, man. I'm not even gonna count this. This was horrible, bruh. It peaked at 800, but all that money we gave back, can you really count this? No. Boom. Boom. And also, oh, you fucker. Why don't you have the baseline here? Bro. All right. And review and advise what the data is telling us. Why are we giving back so much of the profit? Looks like the widening of the SL didn't work. Let's discuss without introducing bias or overfitting. Let me examine the records and test what happened. Waiting for the output, and let's see what the output is. Now, what are my thoughts? My thoughts is that the stop loss is maybe a little bit too wide. My thoughts is also that maybe we need to increase the delta and the strike, right? So let's see. We can't optimize away the stop. I understand that, bitch. 3-bar. What the data is telling us that wider stop loss didn't reduce it. It made it catastrophic, nearly wiped us out, 91% drawdown. The profit factor collapsed. The win rate barely improved despite the fewer stops. The wrong diagnosis theory. Stops are slipping from 20 to 30, so the widening it is to avoid the premature exit. What actually happens is that the 20 was working. It caught losses at a survivable level. Widening it to 28 made bad trades hemorrhaging before exiting. $100. That's crazy. The slippage wasn't the problem. These are 0 DTE. They're supposed to gap. The 20% stop loss was the correct risk control. What should we do instead? Revert back to V4. Okay, 20. Tighten the entry a little bit. Okay. Reduce delta max to avoid at the money red strikes. Add the market regime. You can't optimize away the stop losses and 0 DTE. They gap. That's the nature of the product. The solution isn't to widen the stops. It's to better entry so the stops don't trigger so often. V4 proved this. The stricter filters reduce the stops from 52 to 48 while maintaining profitability. What do you want to test next? All right. Let's go back to 20% SL and then what else? What else? So 20. Do I want to make this more or less? Let me see if I go to 78. Let me see. Okay. Hold on. Let's think. Let's think this through. Okay, max hold time. I'm thinking, what am I thinking? I'm thinking that we should I don't know. Something's telling me to try 78. So I'm going to listen. I'm going to do 78. All right. I know it's making it looser. And then let's do the volume multiplier from 88 to 78. And reduce delta max to 38. And let's test on 2024. Right. We're going here. We're going here. We're going here. And then I also need you. We're going to close you. What are we going to say? V5 SL widen to 28. All right. Beautiful. All right. 78, 38, 20, 2024. I thank you for giving me this little nice command. Now let's test. Now we're running it on 2024. I'm interested to see how this is going to work out. I think this is going to be a lot better because we're getting the best of both worlds. What do I mean by that? I'm adding a little bit more signal strength. I lowered the volume multiplier a bit to see if we can get a little bit more signals coming in, but it's still going to be filtered properly, right? So let's see how this performs. Let's see how you perform. So I thought I was going to be getting more signals, not less. That's crazy. And we went insufficient funds. We went NSF, bro. Should this be a strategy where we it's more so about compounding rather than take profits? What do I mean by that? Like, should I drop the take profits more? Right? Should I drop the take profits from that 28 to 18, from 48 to 30 to 28, and then from 58 to 38? Should this be about compounding? Yeah, this thing is moving through the year and it's barely finding signals. But that delta max dropping the delta, I think. Okay, it's like struggle bus to get to that 1,000 though. Bro, it was at 60 something. I'm not gonna, this is a bit pedantic, fam. Review and let's discuss. I have idea. I have an idea. I'm thinking about lowering it even more from 78 to 58 and then dropping the take profits. Yeah, I think that's what I'm going to do. Me, I believe that's what me do. V2. What was this? Um, volume to 78, max delta 38, and then SL 20. And okay. Please, okay, you got it. It was 2024. It was. Revert, revert, keep. Okay. Instead of a fixed, right, use a relative formula rank the current ball volume versus the 20th percentile. Require 20th percent instead of an absolute multiplier. Adapts to a changing market. The data is telling us is that the baseline 2024 was excellent. Don't fix what isn't broken. The tighter filter is hurting performance. 2023 struggled because it was a choppy year, not because the parameters were wrong. Real solution is market regime detection, not stricter parameters. Hold on. Before we revert, if we were to do, how would it work? Explain via TLDR. All right, let me see how this adaptive volume threshold is going to work. Then if it doesn't, because I was trying again. So, okay. Current system is a fixed multiplier. The problem is that 0.88 doesn't adapt to the market conditions. A quiet morning, low baseline, volatile afternoon, 0.88 high baseline excludes normal spikes. An adaptive system, the recent volume, the last 20 bars, that's crazy. That's high. I'm gonna do maybe I can't do that's too much. How it works to look at the last 20 bars of volume, 20 minutes. It ranks the current bar against those 20 minutes. If the current bar is in the top 40% greater than the 60th percentile, pass filter. Example, quiet morning, last 20 minutes, average 105, current 130. Instead of the fixed, pass, 75 pass. Scenario 2, choppy pass. Okay. Fell. Okay. Oh, because it spiked. Volatile afternoon. Current bar is 195. The fixed system says passed, but the percentile says this is below the average, while this is better. Context aware implementation. Okay. The only thing is that we want to do 5 minutes or even 3 minutes instead of the 20 minutes. It is a bit too long for the strategy we are developing here. Advise via TLDR, which is the better starting point. Starting point. Yeah, let me just do that. Yeah, because waiting 20 minutes before like you can even bust a move, bruh, is kind of a long time, especially for the type of strategies that we're doing here. I mean, we're running from 9:32 to 11:44, so in essence, you have a little bit more than 2 hours to do it. But that's saying that that's taking damn near a third, almost a tenth, a third, maybe a quarter. That's still a lot. 5 minute, last 5 minute matches the current average volume. 3 minute matches the breakout. The 5 minute recommended starting point. 5 minute rank. All right, Artie's using 5 minutes. A small sample size for a percentile, can be jumpy, still somewhat slow to detect the sudden spikes. 3 minute is more aggressive. Only 3 data points is percentiles is very crude. The 60th percentile 3 is the second highest bar. Binary, either pass or fail, no nuance, too sensitive. The math reality check is the 5 bar, 100, 120, 110, 130. The mean is 135. 135 is the 4th out of 10, 80th percentile, reasonably granular. 100, 120, 110, 135. 135 is 3rd out of 3rd, 100 percentile, either 100 percentile, 66 percentile, 33rd percentile, 0th percentile. Very coarse, very, very rigid, right? So let's start with the 5. All right, let's start with the 5 bar, and the percentile is 70th, that would make it more aggressive, right? If so, let's proceed. It's too binary. It's either a yes or no. So I like this. I like this, fam. I like this. Maybe I'm going to start using this percentile. Okay, 70 is more strict. 50 is more loose, more signals. Balanced starting point. No is more conservative, not more aggressive. Top 30% bar. 60 is top 40% bar. Okay, median. Which one? Let's start with 58th percentile. Let's be weird. Let's be weird. Oh, I was thinking about dropping the TP levels too. Perfect 58 percentile, stop 42%, moderate aggressive. Let me implement the adaptive volume threshold with the 5 bar window, 5-minute window, and the 58th percentile. Yeah, it was okay. So this is the shim backtest, adaptive volume filter, and lower TP. Yeah, hold on. I want to lower the take profit as well. Right now, where it's at. Okay, here it is. 58.48. Okay. I'm going to put 48, 35, 28. So then lower TP, TP1, 48, TP2, 38, and then TP3, 28. All right, yep. We're going to lower the TP as well. Let's lower the TP as well. Thank you for the command. I really do appreciate it when you provide that like that. When you provide that like that, I appreciate it. Thank you. I'll run it. Oh, it's not defined. Review and let's fix. Penny for your thoughts. Penny for your thoughts. All right, here we go. It's loading. It is loading. We're running it on 2024 and we updated a few things. So I'm interested to see how this is going to work out. Bro, this is... That adaptive gang jit is not working out. All right. Yeah, see, this adaptive one is not working out the way I thought. Oh, this shit is trash. Straight garbage. I don't know if I'm gonna count. If I'm gonna count this right, because I mean we're getting activity later on in the year. Like, should this count? Like the beginning of the year, bruh, it was pedantic. So should that mean should is this telling me that I need to lower the threshold? Right? Is the 0.58, is that too high? Okay, I'm gonna drop it to 48. Let me see what's good. Let me see what's really good. Let me see the win rate. 55%, 32, 58, 2 point. I mean, this ain't. But again, most of these trades came on the back half of the year, so I don't know. I don't know. It ain't really like review and let's discuss. It ain't really like, you feel me? This is something that I think what I need to do is I'm gonna keep the take profits where it is, but I think I need to lower that threshold for the adaptive volume, right? I mean, yes, in essence, there's one part of it that is working, quote unquote, but there's another part of it that's making a little bit too aggressive, if you see me. So what we need to do is just make it a bit more with panache, as they would say. So that's what we're going to do. Damn, you writing all this just to tell me that? Significant. I'm not going to call it significant improvement, but whatever. Return is 49% better. Adaptive gained 43% higher. Tripled. Finally hitting consistently. Fewer trades, but better quality. Better exit. Okay. Bonus. Break even. So to generate a TP2 is generating 960 versus, okay. I think option 1 test, okay. Fine tune further. No. Accept. No. Okay. I think we need to lower the percentile a bit further. Let's test 48th percentile and gauge performance. Does that make sense? Does that make sense? Well, I hope it does. Yes, makes sense. More aggressive, could catch. Okay. Boom. My fault, y'all. My fault. I was trying to do 3 things at once. Maybe 4. Me, I know. Beautiful. Okay, let me go get you filed away before you run again. What was this? What was this? Remember, what was this? Crap. What was this? Oh, percentile. Adaptive volume. V. What is it? V3. 2024. No, this thing is still strict. Still super strict, homie. I don't know. I don't know what you've been told. See what I'm talking about? I still think it's really strict. Maybe I think I need to lower the candle strength. Maybe let me put the candle strength back to, instead of 0.75, I want to put the candle strength back to like 0.70. We can even do 0.68. Let me see what it's screaming. This is when it usually makes this little run in the back half. I think the 48th percentile is Gucci. I'm interested. I may try the 44th. Oh. Okay, where you at? Where is the win rate? Where is the win rate? A 55%. Where is the max drawdown? Okay. I don't know. I don't know. Oh, I'm tripping. My fault. I'm tripping. I'm falling. I can't get up. No. Review and let's discuss. Thinking about dropping the candle strength from 0.75 to 0.68. I'm tripping. I'm falling. I can't get up. Identical results to 58th. Exact 94 train, same everything. Why no change? The 5 bar. Okay. Both the 48th and 58% drop fall into the same bucket. Third or better. Okay. So lowering it had zero effect. The actual threshold is discretus. Okay. To get loose results, we need to drop it to the 40th percentile or lower. Oh. And drop percentile to 38. I am. Just wait, bruh. Just wait. Just wait. Okay. This is 2024. The 48th percentile. Barely, fam. I don't know. We're getting choppy waters, fam. We're getting choppy waters. I don't know. This is kind of choppy. This is kind of choppy. This is kind of choppy. Can you cross 2,000? It's flirting with it, but every time, okay. Let me shut up and wait. What is the win rate? 57%. Drawdown, 45. That could be better. That's probably improved. Yeah, let me go test it on 23. Okay, review, and then let's run it on 23. Review, and then let's update to run on 2023. Let's have it, homie. We're going to update the strategy to run it on 2023. I'm going to keep the parameters the same because I think we may have fell forward. The only thing is the our TP trades, bro. I'm not going to hold you. I think they're a little bit too less. I'm not going to hold you. Adaptive baseline is 42% more. Baseline is 6% more. Adaptive baseline. Adaptive. Key insight: the adaptive has much better risk management returns despite the lower absolute returns. Why the looser filter works. Closes. Okay. Close before the top 32% candles. Cost 7 more valid breakouts. Oh, so what if I drop it to 60? Include breakouts with moderate volume, not just extreme spikes. Caught 7 more valid breakouts. Trade quality analysis, 101 versus 7. Win rate improved. The average profit improved. Okay, TP1 is the winner, lower. Okay. Now let's run it on 23. Thank you. Right, what we're gonna do, load it up, and then run ya. V5, new adaptive parms, more aggressive. See? Holy cow. Holy cow. But the problem with 23, remember, it just keep giving back too much money. So like this, are we forcing it to keep the money? I hope. So 23 just caught. Okay, let me shut up and wait. Let me see. We may have fell forward, ladies and gentlemen. We may have fell forward. We may have found something. I don't know. Let me see. This is the highest I've seen in 2027, 1920. Okay, see what I'm talking about? Gave back almost $300. I need you not to give back the money, but it's okay to catch it, honey. I got to keep myself entertained somehow. You know what I'm going to do? I'm just not going to look right now. Hold on. I'm just going to wait. I'm going to count to like 20, and then I'm going to look. Hold on. Did we just fell forward? Profit factor is 1.3. Win rate is 49%. The highest I seen was 50. 142 trades. 1,200. We're still giving back too much money, in my opinion. It peaked at 2,000, but we finished at 12. We're giving back too much money, bro. Review and let's discuss. I still feel like we're giving back too much money, but that's okay because we ended with money bunny. I'm not gonna call you honey because I barely even know you. At least take me out for a cup of coffee. I'm stupid. Sorry. Y'all still are getting great stuff, man. I'm really going to limit you because I don't think you need all that to be able to tell me what I already know. Oh, we found something. The only thing is that it's giving back way too much money. It peaked at 2,000. It finished at 1,200. I still think that is a bit like, yo, fam, we could do a little bit better, fam. All right. The adaptive 38 percentile candle, 142 trades, 49%, 56, 1.3, stops 46, major wins versus previous, baseline, adaptive, 95% more profitable in choppy 2023, major dramatic improvement, right? Best risk controlled by 21%, win rate is above the break even. Most trades captured, adaptive. Exit distribution analysis, 28%, 38%, 48. Stop loss still lost $3,000. That's fucking wild. TP2 is the hero. Generated $1,400. The previous version was 1 to 5 hits. Doubled. Okay. No. Should we document these final parms and update the strategy log? No, because I still think there is a bit more room that I can get out of here at Yazimi. All right. We want to try 58 for the candle strength threshold. And what else? Volume look back. Let me try volume look back of 3. Let's try volume look back of 3. And volume look back from 5 men to 3. I mean, to graduate back to school, you need at least a 60, bruh. These get degrees, but this is like, I don't know. Let me test and see what's up. Let me see. Hold on. Boom. Let me get you over before I run the back test. What is this? V6 V6 2023. Filter more aggressive. Appreciate it. What do y'all think? Better or worse? Go ahead and put in the comments. What do you think? Better or worse? I think it's going to be a little bit better. I'm not going to hold you. But let's see. Let's say Let's see, fam. Let's see. Shit. Kind of ran out of money. Y'all saw that. I don't know. This may not be it. This may not be it, fam. What did I load? What did I do? I did the volume and the snap, crackle, and pop. Okay, maybe I'm just going to go and put the volume back at 5. Maybe that's just something that is a non-negotiable. I think 3 minutes is just way too fast, way too much. 5 minutes is more accommodable for us to be able to catch a trend, right? So I'm going to put it back at 5 minutes and just keep everything else the same. That's what I'm going to do right now. Instead, let's put the volume look back at 5 min. Boom. Are you gonna make me do it? Oh, it says I can't read your little chicken scratch. Oh, I told you it can. I told you it can. I'm just gonna shut up. I don't know. I have honestly no idea how this is gonna work or perform. Let's see how it. Let's see the results. To the film. It's like it can't get out of 100. It's trying so hard, but it just can't get. It. Okay, maybe 0.58 is a little bit too much. Yeah, I don't know. I don't know if this is it. I don't know if this legit. I don't know if this is it. Yeah, these are not the palms. This isn't it. I thought again, this is my little notion. I'm still new in this thing, right? And I thought this was gonna help it, but obviously was catastrophically, categorically, empirically incorrect with this. And that's fine. That is completely fine. You know, I just want to. Oh, okay. I was thinking, okay, are you buying puts? But it is. I just seen it. This is so wrong. This is so bad. So bad. Yeah, I know you can reject it. You can reject it. I understand. We can reject it. We can go back to what's working. It ain't 0.5. It's the other one now. Who's all right? That's crazy. These taking 1,000. Do not use 0.58. It destroys the strategy. Should I revert back to the 0.68 to confirm that it works? Yeah. Went catastrophically wrong. All right. Revert. Reverse. 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 All right. We're going back to 0.68. Even if I increase this, that's just pulling at teeth. Yeah, I think let me try 58. Let me try 59, 1159, and then go back to 4068. Okay. All right. All right, let's go back to 0.68 and the end time, update it to 11:59 a.m. and let's run the strategy on 2021. All right, now we're going didn't work. What is this? V5? Nope, 7. 2023. All right. Now I'm first time running it on 2021. Let's see how it works. First time running it on 2021. So I'm interested to see how this performs. This is price and volume. I'm not going to hold you. Huh. Bro, what in the heck? Wait, bruh, this is horrible. All right, review, and then let's go back to 11:44 a.m. That's crazy. That was crazy. I was not expecting that at all. Like, that was a significant drop. You feel me? Yo, I was not expecting that. Okay. Except 2021 was a failure and focus on the years that it worked. Try. All right. Bro, that was just trash. What are the parms for when a bullish or bearish flag / pennant is formed in this strategy. $14. Look what 14 minutes would do to you. You take away 14 minutes, you add 14 minutes. Look what it does. That's 15 minutes. I'm sorry. From 44 to 59 is 15. A bit difficult, yeah. Looking at the code, 3 minute, 5 minute, 38. Price breakout. Close must be 32%. 3 bar, 38. Okay. What specific numbers? Tested 3, 5. 3 is optimal. 4 and 5 are too slow. Sweet spot. Bullish. Bearish. Okay. This is El Difficate, bro. When I say no senses, I don't understand. Boom. Boom. Review and advise why what is going wrong here. But 33 stops, 75 trade, 44% stop rate. Strategy is bleeding out on every other trade. Okay, multiple consecutive stops eroded all the profit. 2020 false breakouts and low volatility. Looking at the trades, many signals formed but immediately reversed. Hold on. Stops triggered too quickly. Average stop was 5 minutes. Winners are smaller. Low signal count. What the data is telling us. 2024 environment. Low intraday volatility between 17 and 20. Slow grind. No sharp reversal. Okay. Widened stop loss. require higher volume is the outlier. All right. What did I do? What did I do? What did I do? Okay. What did I do before? 44. What else did I do? Low year. I'm interested. 2020. Let's see what it did in extreme. In extreme weathers, fam. Let's see what the performance was. Let's see what the performance was in extreme weathers. Then after this, we're going to call this strategy ready to go. I feel like I'm just trying to make it oh so perfect. But this strategy is going to be ready to go, and it's going to be ready to be back tested once you're prepared. Now this is 2020. 2020, we all know it's COVID year, so I'm always interested to see how strategy will perform in this particular climate. I was about to say, I know I had $200. Interesting. Interesting. Strategies at 1100. It's oscillating between like 8 and 1100. Interesting. So high volatility works. High volatility works for this, fam. High volatility works. This is a little bit more shocking than I thought. I'm not going to hold you. I thought I was going to do okay. I didn't think it was going to hit these levels. Let's see where it finishes out. And again, keep in mind, this is COVID year that we're back testing, and I want to see how well it performs. Win rate 54%. We finished at 1,700, 188 trades. Drawdown is 40. Sharp is I could be better, but again, we're in COVID, so I don't understand. 164. Interesting. 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 Yeah, I'm gonna definitely put that in this baseline. Let's talk about 2020. What is this? 2020 V1 baseline. Let's move. The only year I haven't run it on yet is I do have 20. I do. It's from what is that? I think I need to go get October, but I haven't gotten October yet. It's from January till through the end of September. I haven't gotten October yet. As you can see, January through the end of September. Yeah, January through September. Oh, this is 25. This is 2025. Interested to see the results for. We're back testing it on 2025. I mean, I don't know what to think, so I'm just gonna let it go. DC's crazy. All right, let's update before we proceed to create the bot for this strategy. I know it's going to compact, but that's fine. Let me go get the information that I need for the bot. So that's good. We finalized the strategy. I'm Gucci where it's at right now because I think we're trying to like keep adjusting. We're going to overfit. We have a strategy that works. So what I'm going to do right now is I need you. We're going to copy. I'm going to come here. Then I'm going to paste you there. Oh, I copied the path. I need to copy the actual file. Copy. Then I'm going to paste you there. That's just ridiculous. What else do I need? I need a bot. Which bot do I like? Let me use this is maybe there's a so y'all can see all of our bots, right? Spy, QQQ, Spy, Bel Air. Oh, I like what I do with Bel Air, so I want to use that one. Bel Air, and then Star Baby is another Spy. No, I really like what I did with. Yeah, I'm gonna use Bel Air. So to get a reference point, let me go get another one of our bots. Beautiful, beautiful. And now let me copy. Let me bring it over here. Perfect. I need alpaca because this is where we get our actual data. Then I need, oh, I don't. I thought I did. But just in case, let me bring it over, kid. Beautiful. So we have alpaca. You know what you also need is theta. Where is the position? Okay, there it is. Boom, 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 boom. All right, y'all are getting everything today, man. We went from idea, strategy, just another failed year. Just another failed year. Idea, strategy. We have a lot of great things. Now, what we're going to do is actually create the bot for trading. Read and this. Then see reference bot. make sure to understand theta data. Then let's proceed to discuss how we are to create penny for you bot.py. Penny for you. So I'm excited. All right, we're getting to the part where we are creating the bot. I have the actual reference files because this is not my first time making a bot. So we actually have the reference files. I have how it's supposed to work and how it's supposed to do. So what I want to do is give that information over to Claude. It is outputting a lot right now, which I don't think it needs to do. I'm not going to hold. Oh, it's still updating. It's still updating. Don't tell me you're still updating. You should be fine. Go ahead and output. Dum 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 dum. Track win rate over rolling 20 trades. Monitor the average exit. Stop rate should be less if higher. Mark regime issue. Hold time. Daily loss limit 2.5. Average loss matter. Okay. There you go. Okay. Stop spazzing. All right. Thank you. Thank you. Oh, you know what I need to do real quick? Let me go ahead and get IBKR open. So when we are ready to test, it's already up. Reserve the range. Penny for you. Okay. You all right. Let me go get the centralized connection manager. This is okay. All right, here it is. Now let's proceed to get this done. After each step, make sure to test without the use of mocks or placeholders to ensure working. No fallbacks, no cache functions, all real implementations. Brody. All right, what was I doing? I was doing something. Oh, IBKR. Beautiful. Let's go ahead and make sure we are Gucci. So this is not bad. Under 4 hours, we went from strategy, tested set strategy, back test that strategy. Now we're creating our bot so I can paper test. Now I want to try for tomorrow, but I don't think, right? But I'm going to try, but I don't think, but we'll see. We shan't see. Penny for you. Okay, I love it. Oh, all right. I was about to say I already do have mine. And as you can see, oh, matter of fact, that's what y'all was looking at. My fault. I didn't know. These are all of our bots that I was running before in our terminal, right? So if you watched, and I think I was running it today on Twitch, so you all probably wouldn't have seen this, but I was running these bots earlier today, and I did see a couple of great results. So I just wanted to make sure I opened up a window. So when it's time to test this new one here, oh crap, Crapiana, we are Gucci. All right. Let me go back to the code. My fault. Here's the code. I thought you were looking at that. So let me go ahead and I can delete you now because I don't need you there. I can remove you now. No, let me just keep you there. Here is to use for the market/stock data. There you go. You got it, fam. You got everything you need, fam. IBKR is open. IBKR is open. I just wanted to make sure because I know that one could be a little devious. Perfect. I have the IBKR client. Now let me check for the VIX and theta data fetchers that are referenced in. Let me check if the, no, it doesn't. Let me check how imports VIX and, okay. Oh, crap. My fault. Let me put it back. Here you go. Shit, where is it? How come it doesn't say put it back? Put it back and go ahead and put it. Since you don't want to, there you go. I'm almost certain that JIT does not import. Spy, okay. Review and see how the bot does it. And let's make sure to implement those same functions over here for this bot. Oh, did I hit the, okay, I was about to say. Bro, I just gave it to you. Perfect. Now I have the complete Bel Air baby. Let me create the penny for you based off the structure, but implementing the penny for you 3-bar breakout strategy instead of the 2-candle momentum strategy. The key difference is that the signal detection, the 3-bar breakout plus the adaptive volume 38 percentile plus the candle strength, strike selection, a weighted scoring instead of a simple closest to the target, and then TP levels. Let me create the bot now. I still think I can like mess around with this right here. But for right now, let me just keep it where it is. Let's keep it where it is and have a bar cool. And then once it's ready to run, I can run it here in about another 5 or 10 minutes. So you all have seen the entire process, right? From us being able to go, having the bot, creating it, and now, or excuse me, having an idea, creating the backtest for a set idea, backtesting the idea, optimizing the strategy, and now we're creating the bot, right? So I'm excited. I'm going to try. There's no promise, but I'm going to try to see if I can run this for vendredi, or as some would say, Friday. But this may be a, excuse me, the beginning of next week, excuse me. So we'll see how this pans out. Give me the ball. I literally tell you, once the ball is made, I'm going to run it, and then we're going to see how it performs. All right, let me do this. Let me do this. Let me do that. So the market is closed. So we should get that little indicator that says, hey, market is closed. Check back in tomorrow or when the market is open again. My fault, y'all. I really do appreciate your patience. Us being able to get our bot done. We're practically there, like another 5 or 10 minutes or so, and we'll be in testing territory. We'll be in testing territory, and we're going to gauge how well what we've done is ready for actual paper testing tomorrow. I'm not going to hold you taking a little bit longer than I anticipated. I mean, I could also run it here, but what's the fun in that? Because I want to actually run it in the terminal because all of our bots run in terminal. I mean, this is a terminal too, but what we have over here is a little different than what's over here, right? I mean, yes, it's the same terminal, right? So if you want to think about it, but I want to use this one and then test it over here. So we'll see. The bot is here, y'all. Beautiful. Beautiful, 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 beautiful. 3-bar breakout. Okay, scoring system. All right. I love it. So now what I want to do, I'm going to cancel it here. That could be better. Let me go here and then CD. We got to go into the folder first. Now we're in the folder. Now let's run the bot. I can spell Python, right? Make sure it's Gucci. All right, so we have our bot and it's running. So we have another algorithmic bot that we've made and running and ready for paper testing. My only quorum is that it should be a better cleanup, right? It should say goodbye rather than like this little junction here. So we're going to fix that. Let's come back over here. We're going to copy. All right, let's fix. So the cleanup when we exit the bot or when done for the day is a bit better than what is happening here. Let's find the issues and fix. Let's find the issues and fix it. Thank you. So let me just copy that. Let me go ahead and clear you. The keyboard traceback. Okay. Keyboard traceback is just from the Control C. The cleanup actually worked perfectly, but let me improve the graceful shutdown to handle Control C cleanly without showing the traceback. Let me improve the cleanup to be more explicit and handle the case when the tasks are already completed. Beautiful. This is perfect. Now let me clean up the final main wrapper. Now it should be Gucci after that. Now the bot, okay. Now I'm going to test it over here in our terminal. Let's run it. So we see the bot is running. Perfect. It correctly said that the market is closed. We'll wait for the market open. Our critical checks passed. All right. Now let's hit the Control C. Beautiful. That's what I just wanted to see. I didn't want that traceback feedback BS. So let's go back over here. You can go ahead and test it now. Okay, I could just. Beautiful. All right, people. So there you have it. We have created our strategy. We have our bot that's ready to go. I'm just going to test it here real quick just to make sure it's Gucci. Our bot that's ready to go for our next paper session. So we added another bot to the. Okay, perfect. It's ready to go. Another bot is ready to go for paper session. So I'm excited that you all were able to see the process from start to finish. How we have our penny for you bot. For those that want more videos like this, don't forget to hit the like and subscribe button.